Morning, everyone. Today's the 31st, Halloween. Happy Halloween, everyone. Happy Thursday. And this is the Plan Your Trade video. My name is Brad Matheny, and it is very early out here in California. Look at this downward move in the SPY overnight. We are off almost three quarters of a percent, down $4 as of yesterday's close. I mean, I'm kind of waking up to a bit of I don't want to say happiness seeing the market down like this, but it's nice to see that, my predictions have played out very well. Now, I've opened this up to overnight trading so you can see the deep selling that took place overnight, breaking away from uh, our peak excess phase peak pattern. You can see that I called this just beautifully, and now we're back down here into this consolidation range. Like I said, it's playing out just perfectly, absolutely perfectly. I haven't even looked at anything else other than just looking at this SPY chart, and was quite surprised really to see it playing out just ideally just how I predicted it. So let's go back over here to the hourly chart, and then let me come in here and turn off the overnight data. And really, when we get into this mode, which is how I normally present to you guys, we're looking at just regular trading sessions. We're not looking at overnight data. We're looking at a market that's trading right now at 575 down here, 95, much lower. We already know that the SPY has sold off overnight and tried to find some support down here. More than likely, we're going to get that move down lower, just like I expected, down into these areas here, 570 to 567, roughly. We're already seeing that breakdown. We're currently dancing around support right around this area here that I highlighted. Let me draw a box around this. It's so, I mean, I don't want to say funny, but it's so not even unusual. It's like I pick the markets apart. Sometimes I astound myself in the sense that, like my $72,000 call in Bitcoin, or the fact that I'd highlighted these areas here and here on the SPY chart as critical support and resistance, just by following my analysis and using my best judgment, my best tools. I believe really anybody can do this, what I'm doing. I believe it just takes, a bit of time. For example, I've been studying the markets, writing detailed research articles and content for more than probably 15 years. So, I guess when you watch it enough, it just becomes second nature to see it. So, again, we're looking at that breakdown. I'm going to try to get up here so I can show you. We're looking at that breakdown in trend, the consolidation pattern today. So here we have the consolidation pattern moving into that breakdown. I did a video yesterday highlighting how gold and silver, I'm going to take a look at gold and silver right now. Had silver particularly had started moving into this breakdown event yesterday. And I indicated that I thought silver would be leading a move, and that I thought that in the video, I suggested that traders really need to buckle up, plan, prepare for a downside move, because I thought that silver was leading gold in a breakaway attempt, and breaking downward. And now we have a little bit of a move here in gold. You can kind of see it. I'll try to draw it real quick. I'll leave that. But we have this rally up to a peak coming back down. And we do have a little moderate flag here that has rolled down, and it's going to likely try to break this level here, just like silver's going to try to break this level here to the downside. We need to be aware that there is a fairly strong peaking pattern setting up, breaking downward, and we're getting it across various symbols. We have the same activity here, same type of setup. We're rolling down. We're right above this level, the 570 460 area, and we're looking for price to try to either A, find support in this area, which I doubt is going to happen, or B, roll below this area, setting up what would be the next phase, which is the consolidation phase in a new low. We break below the flagging pattern here down into a consolidation pattern. And give you an example, what it looks like. So turn this off. These are other analysis. We'll get rid of these. Remove drawings. And what an excess phase peak pattern looks like is, and I'll try to draw it off of this. This is a good little example. It's a short example, but it is a complete example right here in the middle. So what we have is we rally up to a peak, we come down, we flag, we break down the flag, we move into exhaustion, which is the consolidation period. Then we break down off the consolidation period and set up the ultimate low. So we have the complete pattern here. We have the number one, the peak. We have the number two, the flag. We have the number three, the breakdown of the flag. We have the number four, consolidation. And then we have the number five, the breakdown to the ultimate low. So where we're at right now with most of the charts is we're right in this middle 2 to 3 area. We still have not broken below the flagging low, which would be right here. And we are attempting to move from 2 into 3, which would then consolidate into 4 and then attempt to break down into 5. Now, at any point in time, as I'd mentioned to you, we can rally out of this mode, trying to get out of this type of pattern. We can rally out of this mode, the flagging mode. We can rally off of this consolidation, or we can rally most likely off the bottom, which is the ultimate low. Okay, so we have the ability to invalidate this pattern pretty much at any given time. It's just a matter of where we are within the excess phase peak pattern and what we're going to be doing next. So, but you can see a pretty clean excess phase peak pattern here as an example. We roll from the peak right here into flagging right here, into the breakdown right here to establish a new low, into consolidation, which is 4, and then break below this temporary new low to establish the ultimate low, which is 5. And that's the complete pattern. So we come back over here. Looking at the SPY cycle patterns today, we have a consolidation pattern in carryover mode. We are bullish, explosive, bullish, and bearish biasing. This is probably going to change our trending depending on how we break down today into bearish trending. We'll see, a deep roll down, possibly getting below 574, maybe 574, 573 could be a pretty good indication that we're going to see a big trend change. The patterns themselves have played out cleanly, even though we've had a bit of volatility over the last week or so. And I warned you guys that, as we move into this low liquidity zone, that we may not see very clean pattern representations. But I mean, I got to say, remember, I drew these weeks ago. And if you take a look at what these patterns actually showed, rolling, topping, downward. So rally, 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 moving up towards a peak, rolling into consolidation on this bar, which was down, rotating a little higher on this bar, which was a little up, breaking down, which he did here, rallying back into this mode, consolidating, little bit of a last gasp rally, and then a breakdown, consolidation, breakdown, breakdown. I mean, look at this. Look at how cleanly these have played out. I mean, not perfectly. nothing is 100%, but oh my gosh, to be able to see this type of activity 2, 3 weeks into the future with some moderate degree of validity, oh my gosh. And especially with this big breakdown here. Remember, I'm showing you, what I do and how I look at the charts. So this is pretty much how I determine what I'm going to decide to trade. This I do a little bit more. Like for example, I've shown you some of the other tools that I have, the custom indexes and the like for example, this was a chart. What is this? This is gold. This is the SPY. This was a video. These are some of my intraday scanning, live trading algos. I'm trying to see what else we've got here. Yeah, yep, yep. There's my cat trying to wake me up, wake my rear end up. So again, I have a ton of data. Here's some of my predictive modeling. This is the what's called the ADL system, the predictive learning system. This is a form of AI. And this was 10/11, predicting on a daily chart what was likely for the IWM. So this is, kind of interesting in the sense that it predicts upper and lower outcomes, middle ranges. So you can see the lower ranges here in red and the upper ranges in green. These help me determine, what's likely going to happen. Here's the QQQ daily. Here is the XLF daily. And here is the VIX daily. And here is RSP daily. And here is SSO daily. Now, what I do is I look for clusters. So you see how this pulled up here in this yellow cluster and then started to weakening back down into this trend. So what I would have done is I would have expected SSO at this point. Now remember, this is only 10/10, so or 10/11, only literally about 2 weeks ago. I would have expected. Let me try to get to the pen. I would have expected the SSO to roll through here, potentially moving into consolidation, and then having a big breakdown, and then some kind of a breakdown like this. It wouldn't have been, uh, this would have been the anomaly move. This move here, this would have been the anomaly move simply because we didn't have a lot of data. It didn't group in this area, and this is kind of like a shotgun approach. You fire a shotgun. If anybody's ever fired a shotgun at a target, you have a pretty good cluster of data around the center target, and then you might have the little oddballs that show up further out. Well, that's what we're looking for. We're looking for the cluster to see what the most predominant outcome is. And if we come over here and we take a look at it, all the way here through the 29th, oop, that's not our chart. Where's my data? Cancel. Okay. So here's the 11th. So if we carry all the way out to the end of the week here in SSO, you can see how it's rolled up to about the, let's call it 19th or so, and then started to roll down. And if we come over here to SSO, take a look, rolled up to about, that was the 10th, here about the 19th. Go over here to daily. Rolled up to about the 19th or so, and then rolled down. What was our high? 17th, 18th, 19th, 21st. So there's our rally. There's our pullback. And what we had here was there's our rally up about to the 11th, 12th, 13th, 14th, around the 17th to 19th. Yeah. And then there's our pullback. And you can see it's played out exactly the way the data has predicted. Really, when you look at it, we did the analysis here on the 10th. It predicted a move up and then a roll and then a consolidation and pullback. That's pretty much exactly what we got. The predictive modeling system showed us exactly what was going to happen. And remember, this was going to be on a daily basis, looking forward, looking back at the last basically 10, 15 days to carry out 20 days each into the future, giving us a pretty clear indication. So now, without going too much in sidetrack, let's go back over here to the SPY cycle patterns and come back over here. We are going to be looking at a rolling trend. This is daily. Okay. We are now looking at the rolling trend setting up in the SPY. Oops. Moving into that downward direction. And really, we need to watch this 575, 574.50 level. We're going to take a look at the QQQ. We are now looking at a opening price of 492. We're much lower. We're right down in this area here. So what we have with a downtrend overnight is a move like this. And we are now in the midst of trying to close this gap here, this gap window. Could very easily see a consolidation move into the upper range of the gap, followed by a breakdown just before the election. Remember, and this is the election, so remember, we're going to have this is a 2 hour chart. We're going to have a potentially aggressive low volatility pullback here, maybe moving down into the 485 area, ultimately trying to find support. And again, that is kind of our flagging formation. So you can see we're at a new high. We can't use the excess phase peak pattern here. We would be looking for a flag down here on the way down. And because we can't use the excess phase peak pattern, we're just looking for the initial pullback. And the pullback likely is going to be this move down here, moving into that flagging formation here. So if we're going to get an excess phase peak pattern, it's going to look like this. It's going to come up, come down, and then move into flagging like that. So if we get one, that's what I would be looking for. Okay. I would be looking for some type of a rolling excess phase peak pattern on or after the election. But we're in downtrend, just like this suggested. We had broken into a moderate consolidation period here. Little last gas rally over the last day or so, rolling into downward trending, just like I suggested. And I think we're going to see continued downward trending for one, two, three, maybe 4 days. So we'll see how it plays out. Okay, gold and silver, we've kind of gone over that. Gold is rolling, has rolled now overnight. 2,800 was the high. We never made it to my 2,810 level. Like to have seen it, but we came close. Great call, considering I made that call way back over here. We were trading at 2730. It's $100, $80 move. Silver is broken down as well. The gold cycle patterns are right here, and we are looking at a gap potential today in bearish trending. We are going to likely see gold and silver move downward. Like I mentioned to you weeks ago, this little 4 or 5 day low liquidity move is likely going to be a pretty good indication of panic selling ahead of uncertainty, particularly moving into the elections and the weekend. Now, remember, we have Monday, Tuesday. There's no holiday on Monday. Like I said, I was confused. My wife indicated that we had a holiday on Monday. She worked at the school district, and I thought it was coming up this Monday, but it's next Monday, Veterans Day. So there's no holiday on Monday before the election. Okay, we have all of this panic selling is going to come into play, and all of this low liquidity concern is going to come into play, in my opinion, leading the markets to really rotate and go down. And then lastly, we'll come back over here to Bitcoin, which is stagnating again. And really, we can take a look at this, guys, from a standpoint, like we talked about, of the ultimate high and the potential flagging. and the fact that we may be moving into a consolidation period. So I highlighted this move yesterday. I'll do it again so you guys can see it. And it's an interesting kind of a stunted excess phase peak pattern, okay? So we come up, we rally up, we hit our peak, we come back down, we move into sideways flagging across here. We break down out of sideways flagging, we reach a new low. We move into consolidation. So now let me highlight that for you. Try to make it visible. One sec. We come down here. And we come down here. And where we're at with this, guys, is if this is correct, which it kind of looks like it's correct to me, just simply by the shape, then we're moving into a very stunted little excess phase peak mode, already breaking into phase three. So the way I would count it is number one, number two, flagging, number three, breakdown, number four, consolidation, and then number five, looking for the breakdown low, the ultimate low. Given where we're at, I would say that we're looking at a move again, potentially within a Fibonacci range here. And that would mean that we're looking at a move potentially down into 70,000, maybe 69,000, maybe 68.6, 68.9, or we'll call it 68,400, and then maybe all the way down here to 67. Now, this would be the 382, 50, 618, and 75. And I'm drawing them just off of, off of visual. So if I were to readjust them slightly, that would be my estimate for a downside move, and it would really be from here to here. So how close was I? Yeah, it's pretty close. Much closer on my first drawing. So there you go. So there's 382, 50, 618, and 75. Just off a little bit on this 618 and 75. You can see it right over here. But this gives you an idea of what the breakdown in Bitcoin may be. Now, it might be a sudden breakdown. It might be down to 69,400 or 69,000, 68,700. And then we get some sort of a rally phase out of this area. I think that's highly likely into the election, especially seeing as though both Kamala Harris and Trump are indicating fairly strong support for Bitcoin and crypto. So, but like I said, I think the selling phase that we're going to get into over the next 5, 6 days before the election is going to pretty much draw everything down. So be prepared. I'm going to go ahead and leave it there. I'll go back to the SPY, go get my first cup of coffee, and we will go from there. Remember, SPY is already trading down 431. I mean, this is a big, broad selling event here, guys. And like I said, I'm just happy I could help you guys through this because it really is. It's, not too many people are able to actually do this efficiently. And I'm just very happy that I'm able to lead you guys through this with some sort of clarity. Granted, I'm human. I'm not 100%. I don't, I can't do this, you know, with any expectations of 100% accuracy. I am just trying to provide to you relevant content, content that you can use to plan and prepare and hopefully, see 2, 3, 5 days into the future where the opportunities are. Okay, that's really what it comes down to is to be able to show you that you don't have to. fly by the seat of your pants trying to say, well, I don't know where it's going to go. I'm just going to follow these indicators and try to trade. In a way, you can kind of see where it's going to go. And in a way, you can kind of make some predictions 2, 3, 5, 10 days in advance. And in a way, you can use those to try to time and execute better trades. And that's really kind of, I guess, the goal of what I'm trying to show you is that it's not about following along. It's trying to, in my opinion, it's about trying to be 3 or 4 steps ahead of the market. That way I can play what I believe is most likely to happen, not just 2 minutes from now or 10 minutes from now, but 4, 5, 10 days from now. Okay, guys, I guess I'll leave it there. Happy Thursday. Let's go get some, and I'll check in with you later.